And the medal goes to the IssuesWatch podcast. Hello, and welcome to the IssuesWatch podcast. I'm Brad Muniz, your host for the bi-weekly accounting and auditing episodes. I'm an assurance principal at Clifton Larson Allen. And back with me today is Frank Boudelet, an emeritus partner at Witham and my co-presenter for the Society's Law and Ethics webinars. Welcome back, Frank.
Glad to be here, Brad, but I didn't get a gold.
I won. Look at it.
Congratulations.
Yes.
But
This episode qualifies for Nano CPE credit. If you're interested in earning CPE credit for this episode, hit the pause button now and head over to njcpa.org/nano to find out how. Quick disclaimer, the views and statements expressed herein are our own and not necessarily those of NJCPA, CLA, or Witham. Okay, Frank, this is the first time we're doing a two-part episode.
yes.
Yeah, so we're going to cover.
I'm excited.
We'll say what the topic is in a few seconds, but we're going to cover the first half of it this session and the second half of it next session. Okay?
That's typically how it works.
You're accountant, so I had to explain that. Okay, why? Because I am a medal recipient. I can explain these things.
I don't know anything yet.
Okay,
so.
we'll see. We'll see how you do. Okay. So
I win.
so throughout the year, the AICPA regularly issues some technical questions and answers. Mm-hmm. Okay, and they're really good. My only problem is sometimes I find they're hard to find. You know, I wish that they put it out more regularly, like via email, like an email blast, like the FASB does sometimes and Peak does. And you found an accumulation of all these technical question and answers that they put out during the year.
I did.
And it's like 100 pages.
800 pages.
800 pages.
800 pages.
So there's 800 questions at least.
And answers, at least.
At least.
Yes, there's a lot of questions and answers.
And
great material.
And the way that you said it when we were talking about it, this is stuff, what you say, this is stuff that
you know, but you forgot to know.
Right. And they're basic questions and answers. Yeah. Stuff that when you were doing EQR in your office, people come up and say, hey, if my client never paid me, am I independent? You know, type of thing like that. Mm-hmm. Simple stuff. So
it's all answered here.
So you've identified a couple items. Why don't you start going through it?
Okay, so the first item is pro bono and below cost fees. Okay. A lot of times people are doing audits of ERISA plans and doing for $2,000. So here's the question. May a member perform services for a client for no fee or a fee that's below cost without impairing independence or violating any other rule? And the answer was yes. However, regardless of what fee is charged, the member must be required to comply with all professional standards applicable to the services. For example, you must comply with the general standards rule. Principles, but it's a rule, which means you must undertake only those professional services that the member and the firm can reasonably expect to complete with professional competence, exercise due professional care, adequately plan and supervise the engagement, and obtain relevant information. The member's state board of accountancy may have rules that are more restrictive than provided in the AICPA Code of Conduct, which we know because we teach the ethics course. I do not believe New Jersey has a rule on this.
I don't think so either. And all they really want is you can do work for free if you want,
right.
But you have to comply with the standards. And they're fearful that if people are doing stuff for free, they're going to start cutting corners.
Right. And the one thing they do list here is professional service performed for a client for no fee or fee below cost is not considered a gift for purposes of applying gifts and entertainment. Interesting.
That's interesting.
I thought that was cool.
Yep.
Okay. Want me to take the next one?
Sure, take them all.
Take them all. So, long association of senior personnel and engagement team. This is about familiarity. So the question is, does the familiarity threat to independence increase when senior personnel of the engagement team have been on the test engagement for a long period of time? Now, you know, General Electric was audited by KPMG for 100 years.
No familiarity.
No familiarity. So the answer to the question was yes, familiarity threat to independence may increase when the senior personnel serve on the attest engagement team for a long period of time. The senior personnel will need to determine the significance of these threats and relevant factors for evaluating the threat to independence. Some factors they must consider. The overall length of the individual's relationship with the attest client, including if they were with a prior firm. So a lot of times partners leave a firm, they go to a new firm, the client follows. You got it. A new firm has to take that in consideration. The other big one here was the extent to which, due to the individual's seniority, the individual has the ability to influence the outcome of the attest engagement, for example, by making key decisions or directing the work of others. So you have an engagement partner that's on the engagement for 20 years. There's a familiarity threat. You need to now document why you believe there isn't a familiarity threat. You could say that the firm has quality control procedures where it's reviewed by another person, technical reviewer, and that kind of help mitigate some of that familiarity threat or undue influence. So
when I'm doing second reviews in our office on our checklist, it asks, have you second reviewed this engagement for multiple years?
Right.
But I ran into a situation too, this was years ago, pre-CLA, where one of the partners, I felt he had a familiarity threat. And I tried to debate with him an accounting topic. He wound up being right. I was okay with that. But he wouldn't discuss it. He said, well, this is what the client wants. Right. And I'm like, okay, well, that's not the way that this goes. And the other thing I've seen, too, familiarity, and doesn't necessarily long-standing, but I've heard of people saying, oh, I go on vacation with my client. And it's like, okay, where is this familiarity that you're stepping over the line?
There is an issue. That's why the PCOB has 5-year partner rotation. And AICPA, again, that question is an older question, but you're starting to see it. And they're looking at familiarity.
And there is a lot of added value to a firm continuing to audit a company because of institutional knowledge. But there are safeguards. These words me throwing around these big words.
I know. Safeguards.
There are safeguards that can be put in place at a firm, i.e., independent second reviewer, second review that can turn over, that can change too. Or as you said, PCOB changing partners. There is a lot of good institutional knowledge. Ralph Thomas pushed for that a lot. But familiarity there's a very fine line that you can step over.
And in your work papers, you must put down your threats to independence and your safeguards. So you should put down a familiarity threat, and then what are the safeguards to overcome that threat?
Right. So the next one you hate.
I hate this one. I know you do too. Hosting.
No, I like
hosting.
Right.
So back in 2019, this question was, must a member terminate a client's access to data or records covered by the hosting services interpretation? This is where firms were put a portal together, and you put your tax returns in there. You tell the client, here's the portal, your tax returns in the portal, and they leave it in the portal forever. You suddenly become the client's file room.
Right.
So the answer was the member is not required to terminate services prior to July 1st of 19. However, upon effective date, the member should terminate access to the record. So basically turn it off. They can't have access
Not immediately.
Not immediately.
Right, okay.
Okay. Now the next question is, hosting server interpretation indicates that to avoid providing hosting services, members should terminate the test clients, access to the data records within the port within a reasonable period of time. What is a reasonable period of time? And they have a whole 20 sentences here of what it is, and it is whatever you think it is. It's what's reasonable. Now, they did, though, say they believe 60 days is an appropriate time, because you don't want to put the client at a disadvantage because I'm terminated tomorrow and they don't have a chance to pull the information out.
Yeah, no, it's difficult that they put that number out there, because then somebody could say, well, why did you do 90? Why did you do only 30? Your guidance says 60. I know that's just a recommendation. Even when we were a solo company, we did 180 days.
Right.
Notwithstanding the fact that it said 60.
Yeah.
And we have this question come through on the ethics. Well, I leave it out there, for the client as a convenience, and it's like, well, you're not being paid as a file service.
Way back when this first started with portals, I know accounting firms were making a lot of money by hosting the files cabinet for their clients. So they put the tax returns out there, and they were charging a monthly retainer, and they were making money. So when this came out, they lost a big revenue share.
And it isn't only hosting came out originally as part of it. They first started just talking about, are you hosting the website?
Right.
Because some firms were doing that too. And you can't be doing anything for a client that appears that you're part of their operations or part of their management.
Right.
Okay.
So next one here on tax returns. Must the member terminate the attest client's access to the return within a reasonable period of time after preparing and transmitting? So now do you have a portal where you transmit the tax return in the portal? And the answer is yes. Hosting services indicate that to avoid to providing hosting services, you should terminate it within a reasonable time. Again, so once you submit the tax return to the client for that year, after 60 days, you should be turning off the portal. They can't have access to that return, which means they're going to call you 47 times to get copies of that return. The next item, clarifying the hosting prohibition for test clients. Is there any language? So the nice thing about it is they give you language that you can use. And they said, yes, here's the language, and I'll read it. As an attest client, the firm cannot store your documents, data, or records on behalf because doing so will impair our independence. This is in accordance with Hosting Services Interpretation ET 1.295-143. Client is solely responsible for maintaining its own records. So they do give you a little example to put in your engagement letters. So you can say, hey, look at the engagement letter.
Right.
And now tax planning services. I think that's the next one, right? Yeah, let's get into tax planning services. So the next question is, the member performs year-end tax planning and prepares tax returns for an attest client. Would these services be considered non-attest services and therefore subject to the requirement of non-attest services subtopic of independence rule? And the answer is yes. Tax services are considered non-attest services and therefore subject to the non-attest service topic, which requires, among other things, the member's understanding with the client with respect to the tax services being documented in writing. So that's the whole, we're preparing the tax returns, there's an independence, self-review threat, and then you go through that. So I thought that was a pretty good one, but the next one was interesting.
I had a debate about this one in my office one time. Go ahead.
Do the interpretations non-attest service subtopic apply when the member prepares personal tax returns for the owners or officers and they pay, and officers of a client? Does it matter whether the owners or officers pay for the services themselves or whether the attest client pays for the services? And the answer was, if the personal tax returns are prepared without having to rely on representations of the attest client, then the interpretation of non-attest service topic would not apply.
Exactly.
So therefore, so what it means is you're preparing a 1040 for the owner of the company. And you don't need the company's records to prepare that 1040. Therefore, it's not a non-attest service.
Right. And getting a W-2 is not the records of the company. The last thing I'll say real quick, as we're wrapping up.
Yes.
The last thing I'll say real quick, we talked about hosting. Mm-hmm. One of the other things, we talked about portal a lot. Mm-hmm. One of the things that creeps in there on hosting is, are you keeping their depreciation records?
Yes.
And that they don't have a copy of them. Are you keeping their QuickBooks file and they don't have a copy of them? You are now hosting their data, even though it's just not on a portal.
That's a great point.
So a lot of things you have to look into. Mm-hmm. Okay, that's going to be the end of part one, but I just want to tell you in closing, here's some upcoming accounting and auditing events. The NJCPA is offering a new corporate finance CPE pass and a number of sessions focused on financial reporting, data analytics, and other accounting topics. The pass includes 10 CPE credits for $100.
That's almost like free.
That's almost free. That's probably the cheapest. Honestly, I used to handle CPE in my office. That's the cheapest you can find credits for. Check it out. Learn more at njcpa.org/bundles. On August 30th, there's a 4-hour webinar, Current Issues in Accounting and Auditing, an annual update. Get info at njcpa.org/events. And of course, be sure to join the Society's Accounting and Auditing Standards Interest Group. Sign up for free at njcpa.org/groups. Frank, thank you for pulling this together and joining me for the first half of the session.
Glad to be here, Brad. Glad to help out, and maybe I'll get a medal.
I don't know. Watch for session 2.